Good morning and welcome to your solo 401k daily webinar Q&A session with my solo 401k financial. So we try to help you stop overpaying taxes and start building retirement wealth. Today's topic is, how does a solo 401k make money? We're going to unpack that. Also, this is your chance to get answers. So use the chat to type over your questions regarding today's topic or any other topic surrounding solo 401k plans and even IRAs. Make sure to type them over. It looks like we've got some already, and we'll pause and answer those questions as they come in. So we'll look at a few of those questions here in a moment. So, how does a solo 401k make money? We get this question quite a bit. So a solo 401k is more than just a retirement account. It's a powerful wealth building vehicle designed for self-employed individuals and owner-only businesses with no full-time employees other than a spouse. So again, one of the most common questions we hear is, how does a solo 401k actually make money? So the answer is simple but powerful. Through smart investing and tax advantage growth, that's how it makes money. So let's go over some of these items. Before we do that, let's pause and take a look at some questions. So the first question here is, I want to process a mega backdoor Roth through my recently opened solo 401k plan. The funds are at Fidelity. I have an existing traditional IRA at Vanguard. Do I first need to transfer that balance to my solo 401k pre-tax holding account before contribute post-tax in order to avoid the pro rata rule? Great question. And number one, the pro rata rule does not apply to the solo 401k plan. It applies to IRAs. So if you were processing a backdoor Roth IRA conversion, then that's where you would need to make sure to isolate your non-deductible IRA basis by transferring the gains in that non-deductible IRA as well as other pre-tax IRA funds to the solo 401k plan so that you could isolate your non-deductible IRA funds and then process a backdoor Roth IRA. Here, we're talking about the mega backdoor Roth solo 401k plan. Therefore, you can transfer your pre-tax IRAs to the solo 401k at any time. You can do that before you make your voluntary after-tax solo 401k contribution or after. That's the whole purpose of the mega backdoor Roth solo 401k plan, where you have a separate holding account, aka brokerage account, under the solo 401k plan to hold those voluntary after-tax solo 401k funds. So that way, that's effectively how those voluntary after-tax solo 401k funds are segregated, isolated within the plan. Here's an example of a one participant solo 401k plan. Let's say your self-employed business is taxed as a sole proprietorship or even an S corporation. So your business sponsors the solo 401k plan. So the solo 401k plan is a retirement trust. It's a separate legal entity requiring its own separate EIN number. We would help you open up separate holding accounts under that solo 401k plan. So it's not three separate solo 401k plans. It's just one solo 401k plan. But each holding account under the plan is used to separately track each contribution or source of funds. So when you make a voluntary after-tax solo 401k contribution, it's going to flow into the voluntary after-tax solo 401k holding account, in your case, the Fidelity brokerage account. And once inside that brokerage account, it gets converted to the Roth solo 401k or the Roth IRA. When you transfer your traditional IRA or former employer pre-tax 401k funds, for example, those funds would get transferred into the pre-tax solo 401k bucket. So those will be separately tracked in their own separate pre-tax bucket, hence why it doesn't impact the voluntary after-tax solo 401k contribution as part of the mega backdoor Roth, because the voluntary after-tax solo 401k contributions flow into a separate brokerage account, aka holding account, inside the solo 401k plan to separately track those funds. So, a good question. Let's see if we have some more questions here. Is it too late to do that now in January of 2026 and still make a year 2025 mega backdoor Roth contribution? Or will it be fine if I just empty the traditional IRA balance in Vanguard to zero before doing the pre-tax 401k contribution? So I already addressed that last part of your question regarding how the pro rata rule doesn't apply to solo 401k plans. And I mentioned as to why. Regarding your first question, whether it's too late to do a mega backdoor Roth conversion for tax year 2025, the answer is no, it's not too late. You still have plenty of time. And as a matter of fact, we have a lot of clients who are opening solo 401k plans here in 2026 for the first time. But if you've already opened your solo 401k plan in 2025, or even if you're opening it now, it is not too late to make tax year 2025 voluntary after-tax solo 401k contributions. Reason being is that under the solo 401k rules, each contribution type has its own separate solo 401k setup deadline. So, for example, whether your self-employed business is an S corporation, sole proprietorship, partnership, or an LLC taxed as any of the above, you can actually still open a solo 401k plan here in 2026, as long as you do so by your business tax return due date plus timely filed extension. And you're going to be able to make tax year 2025 voluntary after-tax solo 401k contributions. Here's an example of an S corporation, for example, an LLC taxes an S corporation. You have until March 15 of 2026, or if you file for a business tax return extension for that S corporation, you're going to have until September 15 of 2026 to both open the solo 401k plan here in 2026 and make tax year 2025 voluntary after-tax solo 401k contributions. Same with employer profit sharing contributions. Those can also be made by the business tax return due date plus timely filed extension, as long as you open that solo 401k plan by that date and make the contribution. So when you make that voluntary after-tax solo 401k contribution for tax year 2025, it'll go into the voluntary after-tax solo 401k bucket. So the brokerage account, aka holding account, this account right here labeled after tax. And then of course, you're going to convert the funds here in 2026. So even though you're making a tax year 2025 voluntary after-tax solo 401k contribution here in 2026, by opening and funding that solo 401k plan by the tax return due date plus timely filed extension, the conversion when you convert those voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA, that's going to result in a issue in a form 1099-R for tax year 2026. So you won't get that form 1099-R till January, February of 2027. So don't confuse the contribution rules with the conversion rules. Now, the fact that those voluntary after-tax solo 401k contributions you're making for tax year 2025 here in 2026 do not get converted until 2026 doesn't matter, because those are after-tax funds. You don't get a deduction when you make the contribution, therefore it's not going to be taxable when you convert it. So whether it gets converted in 2025 or 2026 is a moot point. It doesn't matter because they're after-tax funds. Of course, as soon as you make that voluntary after-tax solo 401k contribution, you want to convert those funds right away. Don't wait, so that there are very little gains. Because when the gains get converted to the Roth solo 401k or the Roth IRA, just those small gains will be taxable. Also, by making that voluntary after-tax solo 401k contribution here in 2026 for 2025, and then processing the conversion from the voluntary after-tax solo 401k to the Roth solo 401k or the Roth IRA here in 2026, that's not going to impact your ability to also process a mega backdoor Roth solo 401k for tax year 2026 here in 2026. So here in 2026, you can also make your year 2026 voluntary after-tax solo 401k contribution, or you can wait to make your voluntary after-tax solo 401k contribution for tax year 2026 until 2027 by the year 2027 business tax return due date plus timely filed extension. And then if you do it this year, it'll get converted as well. So that form 1099-R is going to show both conversion amounts. The one that was for the 2025 year voluntary after-tax solo 401k contribution, as well as the amount for the tax year 2026 voluntary after-tax solo 401k contribution. And that's fine. Okay. So good question. Okay, we'll take a look at some more questions here in a moment. Again, go ahead and type over your questions and we'll answer them as they come in. We're going to pause here for a moment and we're going to continue with today's topic, which is how does a solo 401k make money? So 4 ways a solo 401k makes money: investment growth, tax savings, Roth growth, tax advantage compounding. So let's go over each of those. So investment growth. At its core, a solo 401k makes money the same way other retirement plans do, by investing. A solo 401k allows you to invest in a wide range of assets, including equities like stocks, mutual funds, index funds, exchange traded funds, even bonds and CDs, and then also alternative investments. So a self-directed solo 401k plan offered by my solo 401k financial not only allows for investing in equities, but also alternative investments like physical real estate, whether residential or commercial. Also private equity. I know that some clients have invested their solo 401k in private equity like SpaceX, Anthropology, all types of private investments, ChatGPT. So those are all private investments, meaning they're not traded on a stock exchange like the NASDAQ or the Dow Jones. Can also invest in cryptocurrency. Our clients have been investing in cryptocurrency since probably 2012, 2013. Precious metals is a big investment that clients are making. They've been making that for the last few years. It's really jumped in popularity. I know that gold just hit an all-time high above $5,500. Same thing with silver. They hit a new high a couple days ago. So those are all allowed types of metals in a solo 401k plan. We've actually performed a webinar last few months regarding investing in precious metals, the types of precious metals allowed, whether coins or bullion, the purity of those metals, where to store those metals. You can subscribe to our YouTube channel for more videos like this, as well as those past webinars that we've done on precious metal investing and other topics. We've published over 1,100 webinars on our YouTube channel. So please like and subscribe. It helps get the word out to other solopreneurs, and it makes it easier for others to find us. Please also like us across the various social platforms. By subscribing, you also will receive notices as to when we go live. We typically go live at least once a day, many times twice a day. For example, we'll be going live again here in a few hours. So if we don't answer all your questions today on this session, you can ask them in our afternoon session. So again, we're talking about how does a solo 401k make money? Let's keep going here. So we're talking about through investing. So investment growth. So keep in mind that by being able to invest in both equities and alternative investments, this flexibility allows you to diversify your solo 401k portfolio to avoid putting all your eggs in one basket. So diversification is always important. Here at my solo 401k financial, we don't provide investment advice, nor do we sell investments. So you'll want to make sure you consult with your financial advisor as to what investments to make. But I know the rule of thumb is diversification, not putting all your eggs in one basket, because diversification helps manage risk while positioning your solo 401k for long-term growth. Also, all investment earnings, such as capital gains, dividends, rental income, and interest, stay inside that solo 401k, compounding year after year. That's why you oftentimes hear the terminology tax shelter vehicle. That refers to solo 401ks and even IRAs, because you shelter taxes until distributions begin, typically a retirement, or in the case of a Roth solo 401k, all the gains will be tax-free. Also, I know that a lot of advisors out there recommend dollar cost averaging, where you invest your solo 401k funds periodically during the year in various asset classes. So that way you end up not trying to time the market, but instead you're spreading your contributions throughout the year. And that's very popular, especially when investing in equities. Okay, let's take a look at some more questions, and then we'll come back and take a look at this other slide here regarding how does a solo 401k money. We're going to talk about tax savings from pre-tax contributions. That's another way of a solo 401k making money. Here's a question here. There were a number of months in 2025 where I did not actually make the deposit to my solo 401k that was withheld from my paycheck. I don't see an issue there at all. Keep in mind, a solo 401k plan is not a traditional 401k. So don't let your CPA or your tax professional apply the traditional 401k rules to a solo 401k. A traditional 401k meaning a full-time employer 401k, whereas a solo 401k is for owner-only businesses. I was targeting 20,000 for the year for pre-tax contributions, but only got to 12,700 as of August paycheck, and did none after that. I wish to deposit the remaining 7,300 today. That's fine. There's no issue with that. You have until your business tax return due date plus timely filed extension, as I mentioned earlier, to make tax year 2025 contributions. And in your case, you establish your solo 401k plan prior to January 1st of 2026. So you certainly can wait to make your all contribution types, whether employee contributions, employer contributions, as well as voluntary after-tax solo 401k contributions here in 2026 by your business tax return due date plus timely filed extension for tax year 2025. If I wish to deposit the remaining, do I need to follow the voluntary fiduciary correction program? No, it sounds like you're going down the wrong field. Number one, the voluntary fiduciary correction program does not apply to solo 401k plans. That's used for traditional 401k plans. Or should I just correct the W-2 to what was actually contributed and do the rest of my employer contribution? So this is an example of someone getting advice from their CPA that's incorrect, and then you end up getting everything twisted in your head. So I'm glad that you're asking this question. So as I've already mentioned, don't confuse the traditional 401k with the solo 401k. The IRS created solo 401k plans for the self-employed to put them on even par with full-time employer plans. Also, it's called a solo 401k plan because it's much simpler to administer. For example, with the solo 401k plan, you're not required to file an annual Form 5500 easy until the market value of that plan is greater than $250,000. Whereas a traditional 401k plan always has to file a Form 5500, and it's typically the long form or the short form, regardless of the value. Also, a traditional 401k has common law employees, which are W-2 employees who work for the business, whereas a solo 401k plan is for owner-only businesses. So you don't have any common law employees. Therefore, a solo 401k plan is now subject to testing. The discrimination rules don't apply to it. Those apply to traditional 401k plans. So with respect to your contributions, it appears that you have an LLC tax as an S corporation, or it's a standalone S corporation self-employed business. So the contributions for that S corporation self-employed business, those are going to be reported on Form 1120S if it's going to be an employer contribution. If it's an employee contribution, those are going to be reported on your personal Form 1040 tax return. Actually, is Schedule 1. Let me see if I can pull up our cheat sheet. We have a nice cheat sheet on our website regarding how to report contributions on your taxes. Give me a moment here. I'll pull that up. As a matter of fact, let's see if I can share my screen here. Give me a moment. Share screen. Let's see here. Okay, hopefully you can think. So this is a really good resource that everybody should bookmark, whether you're a client or not. Maybe even share with your CPA. But it talks about how to report contributions. And it's going to depend on how your self-employed business is taxed. And here's an example of a webinar that we did last year regarding how to report contributions. Again, if you subscribe to our YouTube channel where we have over 1,100 videos, you will have access to all of these videos. So let's scroll down to the one for a business tax with an S corporation. Here we go. If you take a look at this chart here, it breaks down how to report each type of contribution, whether on your business tax return or personal tax return. So here's an S corporation. If you're going to make pre-tax employer profit sharing contributions, or even Roth solo 401k employer profit sharing contributions, which is allowed resulting from the passage of Secure Act, I can't remember if it was Secure Act 1.0 or 2.0. It was one of those acts that allows for making employer Roth profit sharing contributions. But regardless, employer contributions for an S corporation are reported on Form 1120S, which is the tax return for an S corporation, and it's reported in line 17 of that 1120S. That's if it's an S corporation. For employee contributions, if they're made as pre-tax, they're actually reported on Schedule 1, line 16, which is an attachment to your personal tax return. And that makes sense because that's an employee contribution. Now, alternatively, you can report those employee pre-tax contributions in box 12 of the W-2. In your particular situation, if you're going to make an employee contribution, I would report it on Schedule 1, line 16. Whatever you do, don't report it on the W-2 box 12 as well as Schedule 1, line 16. That'll be double dipping. So you got to pick one or the other. But in your case, if your W-2 doesn't reflect that employee contribution, then you can go ahead and report it on your Schedule 1, line 16 if you're making an employee pre-tax contribution. So take a look at this here. And if you look at the next line, it says voluntary after-tax contributions. Those may be reported in box 14 of Form W-2, but they're not required to be reported. So it sounds like all you need to do in your situation is just make the employee contribution for tax year 2025 here in 2026 by your business tax return due date plus timely filed extension. So hopefully that helps there. So take a look at that. I'm fighting a really bad cold here, so I apologize for the sniffles here. It's that time of the year. Okay, let's see if we have some more questions here. Here's a question. Looks like it's a follow-up question. I have heard several CPAs say that my solo 401k business owner, that many solo 401k business owners just do one payroll in December for the year so that there's less headache around these frequent deposits needed. Do you observe that with your clients, or is there a reason you don't recommend it? Great question. And yes, that's the great thing about a solo 401k plan is that you can choose when to make contributions. You just need to make sure that you make those contributions, whether employee, employer, and voluntary after-tax contribution, by the business tax return due date plus timely filed extension. So we have clients all over the map. A lot of them will make just one total contribution amount up to the overall limit based on their respective self-employment income. In the case of an S corporation, the gross W-2 wages, they'll go ahead and do that right before they file their business tax return. So at the end of the day, some reasons why some clients like to make contributions periodically is maybe they want to make a certain type of investment. Maybe they're trying to time the market, or maybe they're doing dollar cost averaging. As I mentioned earlier, one of the ways the solo 401k makes money is by investing. So by dollar cost averaging, meaning you make investments throughout the year, then that's a way to dollar cost average so that you don't try to time the market. Okay, so let's go back to our daily webinar here, and then we'll go ahead and go over some more of these Q&As. Give me a moment here. So back to our slides here. So again, today we're talking about how does a solo 401k make money? We're also answering your questions live on the air here. So tax savings from pre-tax contributions. That's another way a solo 401k makes money. So that's done indirectly through tax savings. When you make pre-tax solo 401k contributions, for example, you reduce your taxable income for the year. So these solo 401k pre-tax contributions can be made as employee pre-tax deferrals, also known as employee contributions. You can make them as employer profit sharing contributions. So because these contributions are deductible, you receive an immediate tax benefit on your personal or business tax return. And that's going to apply in the year that the contribution is made or that the contribution is made for. So for example, as I mentioned already, you still have time to make employer profit sharing contributions and employee pre-tax contributions here in 2026 for tax year 2025 if you already have a solo 401k plan that you opened prior to December 31st of last year, or even if you open a solo 401k plan for the first time here in 2026, you're going to be able to, at minimum, make employer profit sharing contributions for tax year 2025 here in 2026. That's if your self-employed business is taxed as an S corporation or partnership. If your business is taxed as a sole proprietorship, you can actually still even make employee pre-tax contributions here in 2026 when opening the plan for the first time here in 2026 for tax year 2025. Because Secure Act 2.0 changed the rules for a sole proprietorship, where if you wait to open a solo 401k plan for your self-employed sole proprietorship business until this year in 2026, if you open it by April 15 of 2026 and also make the employee pre-tax or employee Roth contribution by April 15 of 2026, you'll be able to make it for tax year 2025. It's too late to make employee contributions here in 2026 for a S Corp or a partnership. If you're opening the solo 401k plan for the first time in 2026, you wouldn't be able to make tax year 2025 employee contributions. We've actually covered that topic at great length. Again, if you subscribe to our YouTube channel, you can access all those webinars, all those past webinars. So again, a solo 401k makes money with tax savings from pre-tax 401k contributions. So because these contributions are deductible, you receive an immediate tax benefit. So in effect, the IRS helps fund part of your retirement by allowing you to keep more of your income working instead of paying it in taxes. So that's again why a solo 401k is referred to as a tax shelter vehicle. You're sheltering funds from taxes by making pre-tax contributions. So once inside the plan, those pre-tax funds grow tax deferred, meaning you don't pay taxes on investment gains until distributions are taken in retirement. Okay, let's take a look at some more questions before we go over our next slide, which is another example of how a solo 401k makes money. And that's by making after-tax contributions as well as Roth contributions. Here's a question. What do we need to do to submit the 5500 Easy report? Good question. So here at my solo 401k financial, besides being solo 401k plan providers, we also provide ongoing compliance support for clients who timely request it. And the compliance support is covered in our annual fee. We don't charge extra for those compliance support items like issuing a Form 1099-R for reporting distributions, conversions, as well as Form 5500 Easy, which is an informational return, which applies once the market value of your solo 401k plan is greater than $250,000 in value. And you have to add up all of the funds in your solo 401k plan, including all the participants' funds, to determine if that $250,000 filing threshold has been met. So for example, if the market value of your solo 401k plan was greater than $250,000 in value as of the end of 2025, then a Form 5500 Easy needs to be filed with the government by July 31st of this year. And I'm going to share a link here. If you go to our Forms tab, you can fill out our Form 5500 Easy Request form. There's the link there. If you scroll down, there's an online form that you would fill out if you need us to prepare the Form 5500 Easy for tax year 2025, which is due by July 31st of this year. Also, if you think the market value of your solo 401k plan is going to be greater than $250,000 as of the end of this year, so by December 31st of 2026, under that same Forms tab, you can fill out an online form to get added to the Form 5500 Easy Preparation, which would be due by July 31st of next year, 2027, if the market value of your solo 401k plan is going to be greater than $250,000 as of the end of this year, so December 31st of 2026. So let's see if we have some more questions here. So where are we at here? Give me a moment while I keep scrolling here for the questions. When is the due date to submit the statements? Well, we don't need account statements to prepare the Form 5500 Easy. That link there, if you go to the Forms tab and you fill out the Form 5500 Easy link, we ask for the information right there that we need to prepare that 5500 Easy. You don't need to provide us with account statements. So here's a question here. Just to confirm what you said earlier, if I have monthly withholding from my payroll for my pre-tax contributions of around 23,500 for the year, since it's a solo 401k plan for an S corp, you're saying I'm free to make the actual contribution related to those withholdings at any time before the timely filed tax return, even if I want to try to time the market at random. That's exactly right. You don't have to make the employee contributions periodically. You can wait to make all of your employee pre-tax solo 401k contributions by the tax return due date plus timely filed extension. Okay, let's take a look at this next slide here. So again, we're talking about how a solo 401k makes money. Let's go back to this slide here. So a solo 401k can also make money through Roth contributions, which allow for tax-free growth. So there are two primary ways Roth money gets into a solo 401k plan. It can get in the plan through Roth employee contributions. These are contributions you make after tax, but all future growth and qualified withdrawals are 100% tax-free. So you don't get a deduction on your taxes when you make an employee Roth solo 401k contribution, but the trade-off is that the solo 401k is going to make money if those investments grow nicely. If you make the right types of investments, they'll grow tax-free. Another method is by making voluntary after-tax solo 401k contributions, which then get converted to the Roth Solo 401k or the Roth IRA. That's known as the Mega Backdoor Roth Solo 401k. And here is my Solo 401k Financial. We were actually the first Solo 401k providers in the entire industry to offer the Mega Backdoor Roth Solo 401k, starting all the way back in 2013. And we've seen an exponential growth in the Mega Backdoor Roth strategy through the years. And here is my Solo 401k Financial. We'll perform the necessary Form 1099-R reporting for that Mega Backdoor Roth strategy. That's all covered in our annual fee as part of the ongoing compliance support. So voluntary after-tax contributions get converted to the Roth Solo 401k or the Roth IRA. So this is one of the most powerful features of an advanced solo 401k. And that's the ability to make voluntary after-tax contributions and then convert them right away to the Roth Solo 401k through what's known as an end-plan Roth conversion, or a Roth rollover, meaning you convert those voluntary after-tax solo 401k funds to a Roth IRA. So these contributions do not provide a tax deduction in the year that they are made. However, once converted to the Roth, all future investment growth is tax-free. So take advantage while you can. So this strategy allows you to stuff significantly more money into Roth status, therefore accelerating long-term tax-free wealth accumulation. Okay, before we take a look at the next slide, let's see if we have any other questions. So again, if this information is helping you to feel more secure about your future, please take 1 second to like and subscribe. It tells the community that this information is helpful and it helps others like you to find it. So please just take a moment to like and subscribe. So we're discussing how does a solo 401k money. We're also answering your questions. We'll be going live again here in a few hours. So if we don't get to all your questions now, that's okay. You can join again in a few hours. These webinars are also recorded. They'll be posted on our YouTube channel for you to listen to them in your pajamas later if you need to. Okay, I don't see any other questions at the moment, so let's continue here. So another way that a solo 401k makes money is through tax advantage compounding. So whether you are using pre-tax or Roth contributions, the real magic of a solo 401k is compounding. So pre-tax solo 401k funds, they grow tax deferred. Whereas Roth solo 401k funds, the investments grow tax free. So because taxes don't erode gains each year, more of your money stays invested and compounds faster over time. So this tax advantage compounding is a key reason why solo 401k can outperform taxable investments over the long run. Okay, let's take a look at our next slide. So why is the solo 401k powerful? Well, we've kind of been covering this. So in short, a solo 401k makes money by combining broad investment flexibility, diversification across traditional and alternative investments. You get immediate tax savings from pre-tax contributions, long-term tax-free growth through Roth strategies, including the mega backdoor Roth solo 401k. So think of the solo 401k as a tax-efficient investment vehicle, one that allows your money to grow faster by minimizing the drag of taxes while maximizing compounding. So for self-employed individuals looking to build serious retirement wealth, few tools are as powerful as a properly designed solo 401k plan. So here at my solo 401k financial, we offer a self-directed solo 401k plan that allows for the mega backdoor Roth solo 401k strategy, participant loans where you can borrow 50% of your solo 401k balance. You can also make employer Roth contributions as well as employer pre-tax contributions. It also allows for alternative investments like real estate, precious metals, cryptocurrency. Also, the self-directed solo 401k offered by my solo 401k financial also comes with the $1,500 auto contribution credit. So let's talk about the $1,500 auto contribution credit. Let's see if I can find my slides on that. So here's the slide here. So the $1,500 auto contribution credit, it's a dollar for dollar tax credit. It's equal to $500 per year for a maximum of $1,500 over 3 years. So the government created the auto contribution credit to help individuals save for retirement by opening up 401ks, including a solo 401k plan. So as long as you open the solo 401k plan with the solo 401k plan provider, like my solo 401k financial, who offers a solo 401k plan with the auto contribution credit built into it, along with the applicable schedules, then you would qualify for that auto contribution credit. We were actually the first in the industry to offer the auto contribution credit starting the middle of December of 2023. Other self-directed solo 401k providers have then started to offer it, which is great. However, traditional solo 401k providers like the Fidelities of the world, Charles Schwab, T. Rowe Price, Chase Bank, Bank of America through Merrill Lynch, Wells Fargo, none of those traditional providers offer a solo 401k plan with the auto contribution credit. Maybe they will eventually, but if you have an existing solo 401k plan at any of those institutions, you can switch that solo 401k to a solo 401k from my solo 401k financial, and you would qualify for the auto contribution credit effective immediately. So here in 2026, you can restate that plan to our plan. That's called changing solo 401k providers. That's not going to result in having to file a final Form 5500 easy or Form 1099R when you switch solo 401k providers, because that's called a restatement. You're not closing your plan, you're effectively firing your current solo 401k provider and hiring a new solo 401k provider. So you would fall under our solo 401k plan documents that are built with the auto contribution credit. It's a dollar for dollar credit, so it's better than an expense. It's going to reduce your business taxable income on a dollar for dollar basis. So with this auto contribution tax credit, the cost of both opening and maintaining a solo 401k plan is basically free for many years to come. Because the $1,500 is going to cover the cost to open and maintain a solo 401k plan. I think we did a calculation, it would be like 7 years that $1,500 credit would cover all your expenses for that plan through my solo 401k financial. Now, what's great about the auto contribution credit is that once it gets added to your plan, and also we can add this to existing solo 401k clients who opened the solo 401k plan with us prior to when it first became available, which was the middle of December of 2023. So if you opened your solo 401k prior to the middle of December of 2023 with my solo 401k financial, we can add this auto contribution to your plan now. So we would need to amend your plan and you would qualify for this auto contribution credit starting here in 2026. So you're going to claim that auto contribution credit over a 3-year period in $500 increments for a total of $1,500. So $500 for 2026, another $500 for tax year 2027, and a final $500 amount for 2028. You're going to file Form 8881 a total of 3 times. So once each year, one for 2026, a second one for 2027, and a third one for 2028. That Form 8881 is very easy to fill out. We have a video and a PowerPoint walkthrough. So definitely need to take advantage of that. Looks like we got a question here. I noticed the table that shows the FICA does not apply to employer contributions. So hypothetically, if you only have capacity to contribute amounts like $10,000 for the year, It's smarter to do it as an employer contribution instead of employee contribution, since the employer contribution will avoid FICA. Yes, it certainly is. That's why we have a lot of clients that convert their self-employed business from a sole proprietorship or a partnership to an S corporation, so that they can save on FICA on the employer side. And also, when your business is taxed as an S corporation, it takes less earned income to maximize your solo 401k contributions for the year. For example, if your self-employed business is a sole proprietorship and you report $100,000 of line 31 Schedule C, which is the net self-employment income for its sole proprietorship, versus $100,000 for an S corporation that reports $100,000 of W-2 gross wages, you're going to be able to contribute more to the solo 401k plan through that S corporation than you can with the sole proprietorship. That's because that $100,000 of line 31 Schedule C self-employment income, you have to subtract 1/2 of self-employment income tax from that line 31. As a result, you end up with less earned income that you can use to calculate your solo 401k contributions. Whereas the S corporation, in this example, you can use the entire $100,000 for the solo 401k calculation. So for example, let's say you want to make an employer profit sharing contribution to your S corporation sponsored solo 401k. You can make a $25,000 employer profit sharing contribution based on $100,000 of W-2 wages, box one, the gross wages. So 25% times 100,000 is $25,000. With the sole proprietorship, you're going to have to subtract 1/2 of self-employment income tax. So it'll probably bring you down to, like, let's say $95,000. You multiply 20% times $95,000. That's a heck of a lot less than $25,000 if you make that same calculation through a self-employed business taxed as an S corporation. So good question. Okay, looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. We know your time is valuable, but we think this is worth it. It helps secure your tax shelter solo 401k future. So if you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here again in a few hours with more crucial content. Until then, have a good rest of the day.